That's a blue dot, but we're still falling and definitely below the 50-day line. So Chris, what do you think of the market action?
Well, we've been seeing the advanced decline line, go lower for a number of weeks, even a month or so. So the internals have been weaker, and a correction is never a bad thing because it just sets up new opportunities. So the key here is take some profits, reduce your exposure. We were talking about it the other day. It's always a good idea to just go through your portfolio, sort it by losers to winners, and if you're down on stocks and the market's selling off, get rid of those. Don't take those deeper losses. So I think at this point it's be defensive and let's see where it shakes out. I mean, I didn't like that. Can we go to the Qs? Because I think that was in some ways more dramatic over the last couple of days. Maybe it's just because I pay more attention to that.
Hang on, let me
zoom in a little bit there. Yeah. So, we had a reversal on, I guess, yeah, was that Monday? It's so hard to keep track of everything. Yeah. So on Monday, so, as Justin was saying, it was an expectation breaker the next day because it didn't go higher. When you come down on the 21-day and reverse like that, you expect to have another up day. It wasn't a terrible day, but then yesterday we undercut the lows of both those days, and closed below them. So that was really okay. The market is is pulling back, and indeed we're seeing that this morning, although already the Qs are only down 0.3%. So it's not a terrible open, and it hasn't even touched the 50-day yet.
Yeah, S&P 500 and Dow only down 0.4% too. So not such a bad open compared to where we were in pre-market trading.
Yeah, I mean, there was a time when the NASDAQ, there was down 0.9, I think, or at least 0.8, and the Dow was definitely over 1%. Here's the S&P. So Harold, what kind of what kind of sectors is there anything that looks good right now? It seems like we've had a lot of broad-based weakness in the past few days here.
Yeah, it is broad-based as far as the weakness. Looking yesterday, your defensive stocks were down. Campbell's and General Mills and your tech stocks were down. So across the board, it was just weakness. And like Chris said, it's time to really take a look at your portfolio, keep those losing stocks from losing more. Cut your losses and manage your winners. See what's going on.
I'm going to go over to just want to show IWM, because that one is now below its 200-day line for the first time since a day or two, like basically in September. So that's a sign of market breadth. It's going to weaken. And I know that, Harold, you've been looking at this one quite a bit, pointed this out to us, and that just keeps on getting worse. As you say, the market breadth is now I believe below 2000, is now at a 2021 low, now getting into last year. So that's not good performance in that regard. Ken, have you been pulling back in the last few days?
Yeah, I have been, and I think we've all been fairly transparent about kind of scaling back and trimming holdings. I'm back down to about 60% thereabouts. So my portfolio is down less than the broad market at this point. What's been frustrating is that when you see all these yellow flags and you start to take defensive measures with your portfolio, then the next day you have the market up 1%, and then you're out of position because you're underinvested. But I don't know. I just think with the waning breadth in the Nasdaq for several weeks now, there are enough yellow flags out there to play defense. But I have to say the market so far is is trying to show resilience, just down a lot less than what they were in pre-market trading. And again, like I mentioned yesterday, when you're going through the IBD 50 and you're going through the MarketSmith Growth 250 and maybe other screens that you like to run in MarketSmith, it's just really been pretty dry in terms of stocks that look good, that might be worth a nibble, might be worth a 2-3% small starter position. So I've just been definitely taking the foot off the accelerator. Like Harold and Chris said, stocks that I was down 2 or 3% after a recent purchase, I've gotten rid of those and just kind of holding on to my winners. Like I said, I'm still in DocuSign, and was really thinking an institutional quality stock like this would be able to find support at its 50-day moving average, and it's making a stand so far, but so it's actually acting okay. I think the stock is up a little bit today, so just letting some of my winners work. I've seen some gains dwindle a little bit, but not to a level where I feel like locking in profits is the best thing to do right now.
Gotcha. Going to be going over to Chris. Let's start off with NVIDIA, which was up 2% in the pre-market. And even with the market coming back up, the NASDAQ and the NVIDIA is actually now down a fraction. So I've got it down about 0.2%.
Yeah, I mean, not surprising given the market, although the market's not that bad right now. I mean, it's not doing anything wrong, especially if you bought it out of the last base. If you were buying the reversal like I was off of 178, I took small profits a couple days ago just because I didn't have enough profit cushion and the market wasn't doing what's right. So, but if you've got a profit right now, just hang out. Let's see how it handles itself. And I mean, it's quite possible if the market gets worse or the street turns against it, it could really close below its 10-week moving average for the week. So that's something to keep an eye on. We'll have to be watching it today and tomorrow.
Yeah, now it's down about 2.7% below that. Just to show quickly, AMD, it's interesting, in the pre-market, AMD was often down and NVIDIA was up. Right now, AMD is actually up about 0.3. So it's like it's trying to hold the 21-day line, sort of giving up, I guess, a little over half of that rally, that surge.